Right. So, yeah, in Aerotrac in finance, probably the best example, if you like, of and the best starting point really for the purpose of this webinar is the ledger codes themselves. So essentially, Aerotrac allows you to mimic whatever it is that you've got set up within your ledger code structure. Now, you can, if you want, have every single ledger code that you've got in your accounting software mirrored in Aerotrac. There are certain things like, some of the taxation stuff, national insurance, um, shareholders, stake, that kind of thing. That they're the sort of things that, to be honest, Aerotrac doesn't really manage or do. That's really all part and parcel of either your payroll system or just sort of general top level balance sheet accounting. But certainly anything basically related to the MRO side of things would need to be set up in here. So from an MRO perspective, we essentially try to mirror whatever your chart of accounts is. We tend to work on the basis that it's best off having a fairly simple chart of accounts. Obviously, that's entirely up to you. You can have it as complicated or as simplistic as you wish. But as generally, when we first start with a new customer, we'll always sort of push the idea of having a fairly simplistic set of chart of accounts, because the idea is that Aerotrac allows you to do the analysis of that from within the application itself. Obviously, there's a bit that says once you push it over into your accounting software, the ability to drill down on, well, what is that? Where did that come from? That's not going to be available in that application. It's going to be in Aerotrac. So in here, as I say, is where we list all your ledger codes. And as I say, they should match, but it's not completely set in stone. For sure, anything that you're pushing and transacting in Aerotrac definitely needs to exist as a ledger code within the accounting software. So each and every single code needs to be classified. And as you can see, I've got my, oh, by the way, my data is not fantastic, I think it's fair to say. This has been going since, well, actually, I think you can see the first one there was set up in 2002. So the database is quite mature, and it's probably got one or two things in it that maybe aren't quite technically as correct as they should be. So apologies for that if you pick me up on anything. My apologies in advance. But as you can see, I've got all the codes classified in here. And essentially, it's doing the same thing as you have to do in your accounting software, which you have to classify things as to whether or not they're a P&L or a balance sheet account. So we can see here that I've got shelf stock, with material, with labor, with miscellaneous. If I scroll down a little bit and just go to some of the P&L codes to start with. So I mean, a good example of the P&L. P&L is broken up into sort of three categories, if you like, from a classification point of view. So obviously it's a P&L account. And in this instance, I've flagged it as an expense code, which basically means that you can take that or take an invoice and point that directly at that ledger code there. But then also you've got the ability to set up other codes, which are also P&L codes, which are kind of related to the same thing, but actually they're cost of sales codes. So in this instance, you'll see this is a cost of sales code, which is also classified as a miscellaneous code. We'll speak about that in a moment. But essentially, this is one of the big things with Aerotrac is you've got expenses, which is stuff where you're just taking an invoice and basically you're just posting that directly to the P&L, as opposed to taking a cost, which you're then going to push back towards a customer, or that you want to include as part of the cost of the sale of the overall job or sales order or whatever transaction it is that specifically relates to. And they are two very, very different things in terms of the way that they behave. The expense codes are pretty straightforward. They just literally go straight to your P&L. One of the overriding features of the way that Aerotrac works is, as far as practically possible, it tries to keep everything at the balance sheet level until such times as you're ready to invoice it. So, and it largely does that through work in progress. So when you buy a part, it doesn't do any transactions against the P&L. It's all held at a balance sheet level. So essentially, you're just going from effectively bank to stock. You're just transferring one asset into another. You're going from money in the bank account to it being a part in stock. When you pick that part, it moves out of stock and it moves into work in progress materials. So again, it's all being held at a balance sheet level. And Aerotrac's really all about that all the way through. It's trying to give you the opportunity to take any cost, be those hours that are booked against the project, subcontract processes, or any outside services related to a job or a sales order that you're trying to track and keep against the job until the point at which you invoice it. And then and only then does it impact on the P&L. And that's one of the major differences, I would say, between an expense code and a cost of sales code. With an expense code, you can take an invoice and you can post it directly to an expense code. You cannot do that with a cost of sales code. In a cost of sales code, you have the option to be able to take the invoice and point it at a project or point it as a sales order. And what that will do is it'll transfer it from there to work in progress. And from there, it then moves on to cost of sales, but only at the point at which you generate the revenue that would otherwise net it off. So, and the idea really is to take out big peaks and troughs in your P&L. So as you're reporting your monthly figures for the month, it's going to take out these big things where you've bought something in one month, but then not sold it until the next. And that's really kind of the principal purpose of the way that Aerotrac works, which is to try as far as possible to keep everything at the balance sheet level until such times as you bill it. Effectively, work in progress is unbilled revenue. And we'll discuss a bit more about work in progress in a minute. So as I say, we've got these other classifications as well for the P&L codes, which is material, labour, subcon, and miscellaneous. And that's a feature of Aerotrac all the way through, which is we break all your costs and your revenue up into four broad categories: parts, labour, subcontract, and any other miscellaneous costs. You can then break them down into very detailed cost of sales accounts if you wish. But yeah, essentially they all fall into those broad categories from a reporting perspective. One thing I would say as well about the classifications is it's quite important, particularly with the cost of sales and the revenue codes, to make sure that they're classified correctly as sales and cost of sales. Actually, I'll come back to that in a little minute when I talk about the mapping over here. But yeah, so that's the P&L. The the balance sheet stuff. Well, we were just looking at stock right at the beginning. So we can see that actually, when you set up the balance sheet codes, Aerotrac has a certain number of predefined ones. And once you set them up and you start transacting against these, you cannot change them. That code is kind of locked in forever and a day. And if you needed to change it, you would have to come to Tracware and we can write a program that will allow you to transfer it from one code to another. The key ones, obviously, are all the different WIP codes. So as I say, there's one for each account for parts, labour, subcon, and materials. From a stock perspective, obviously we shouldn't change that. That's probably not a good idea. But yeah, so this is my primary stock code. There's just one stock code. So again, you can analyze stock using stock groups, so you can break down what the stock is, how old it is, whether it's aging stock, all that kind of stuff. But there is just the one single nominal ledger code basically for stock. You can do some work on capitalized material, but they're all valued at zero. Basically, capitalized stock is all valued at zero, and effectively you have to control that off of Aerotrac in a different mechanism. But typically it relates to fixed assets and tools and stuff like that. I mentioned about the WIP codes. The other one that's slightly common, it's a bit of a misnomer really, which is this control code. Control codes, and to be honest, Aerotrac probably needs a little bit of tidying up in terms of the classifications, because the control codes wouldn't necessarily just be balance sheet codes. They could also be P&L codes. And what we mean is these are codes that Aerotrac controls and you cannot change them. Okay, it relates basically to the mapping that we do here. So they're codes where once you plug them into something like the balance sheet or the P&L or whatever it is like that, um, those codes are basically being controlled by Aerotrac, not by you. You have no option, as you do, for example, with expense codes or with cost of sales codes, to be able to select which one you would like to use. With the control code, Aerotrac is effectively controlling the use of that code, and that's kind of what it alludes to. Okay. So, as I say, the classification is really, really important. Um, I mean, one important thing to note is that whatever the classifications are in Aerotrac, to a certain degree, that's irrelevant in terms of your accounts, because what really matters is how you've got that code classified within your accounting software. At the end of the day, Aerotrac is just making a posting to stock, to WIP, to stock variance, whatever it may be. And the critical thing really is not how it's classified in Aerotrac, but how is it classified within your accounting software. So it's very important that aspect of, obviously there's a bit that says the two really ought to marry up, because otherwise potentially you're making debits and credits the wrong way round potentially. But yeah, obviously that's the key bit is that the two really should kind of match up or balance. So the other thing as well is if the classifications are not right, it can affect how some of your reports appear, and I'll explain what I mean by that just in a minute. Okay, so ledger codes, classification, all pretty much matching up with whatever you've got in your accounting software. I'll just go through this kind of mapping process. Sorry, I just need to cancel that, because I'm not planning on making any changes there. So here's our balance sheet codes, and essentially all we're doing when we put this information in, and this should all basically be populated before you go live, is that as you transact anything within Aerotrac, it will automatically start transacting on these ledger codes. So when you pick apart from stock, it'll credit stock and it will debit work in progress materials. When you book a part into stock, it will debit stock and it will credit that stock accrual account. So there's a whole bunch of different things here. Unfortunately, I won't have time to go through each and every single one of them in detail, but there are a couple that I think we're going to talk about. We're obviously going to talk about the work in progress. We're going to talk about stock and stock accrual. I'm also going to have a quick overview of the subcon clearing and the MISC cost clearing accounts as well. But basically, yeah, so these are all the default ledger codes that are being transacted based on these settings whenever you do anything within Aerotrac. Same for the P&L. You've got your cost of sales defaults and your sales defaults. Now, these are purely just defaults. Okay, when it actually comes to doing an invoice, you can choose whatever you like from a sales and a cost of sales point of view. So whatever revenue code you're using, there's complete flexibility for you to be able to choose what you want to do. Okay, one important point, and it goes back a little bit to what I was mentioning about the classifications before. Once these defaults are in and set, when you raise an invoice, if this is set as being the default, then these will be the default revenue codes that will appear when you raise the invoice. Now, one thing here is if within the ledger codes you were to go in and change one of those sales or cost of sales codes to not a sales, and instead called it, well, just left it completely blank, Aerotrac would still make the posting to it, but what that will do is that will affect things like your margin report or your cost of sales reports, depending on obviously what you change. So although Aerotrac is making the posting, if the code is not classified correctly as either a sales or a cost of sales code, it gets excluded from the revenue or excluded from the cost of sales. So consequently, it actually distorts some of the reports. So it's very, very important to make sure that the classifications of the codes are set correctly. One other thing as well that the classifications do is it actually determines what you can and can't select on certain screens. So, for example, when you're on the project invoice, as I just mentioned, you can only select codes that are classed as revenue codes on the parts charged, labor charge, subcontract charge tabs. All the cost of sales codes will all just appear obviously on the on the parts issued, and it won't let you randomly just select stuff unless they're classified correctly in here. Okay. So obviously a hugely important part of the way that Aerotrac is set up. Okay. So, right, I'll come out of there and just very quickly go over and talk a little bit about financial setup. So most of this is all kind of a bit of a done deal. This top section here on accounting options is largely related to one particular accounting software that Aerotrac links with and used to do a lot more links with than it does now. But there are certain options in here which are kind of useful. So, for example, there's a couple of overrides here in relation to whether you're using no overrides, rework groups or stock groups. I'll explain a bit more about that later on. And possibly, in terms of labour charges. So are we using the labour rate, for example, that's coming out from specifically from the customer, or are we going to use the departmental rates that we've got set up for each of the different departments? So a couple of default controls that we've got sat within there. This stock moving category is a very important section actually, where you can classify your stock as to moving or non-moving. So a very useful feature, which we can probably go over again at another time. From a bank details point of view, this is selected on the customer screen. So whatever you put into here, you select on the customer details, and that's what appears on the invoice, basically telling the customer pay your money into this account. If you choose, or if you don't select a bank account on the customer details, then what it will typically do is just use the primary account. So it will just automatically pick whatever you flagged as being the primary account. Probably one of the most commonly used screens is the currencies. Obviously, you can change this as often as you like. It's important to sort of point out the fact that obviously there's a buying and a selling rate. So you can set that up. Personally, I've always preferred to just keep the same rate for everything, and typically in the UK we just stick to whatever the HMRC figure is. It does make life a little bit easier, but you can ideally sort of set your purchase or your selling rate as being slightly different and favourable to you, if you like, particularly on the selling side of things. One thing is with the exchange rates is Aerotrac, unless you set up spot rates, Aerotrac doesn't really keep a history of the exchange rate. So when you go in here and you change it, it doesn't know what the exchange rate was 5 minutes ago. This is just the current rate that's at now. Obviously, you can see it through purchase invoices and whatever in relation to what exchange rate was in force at the point at which you took a euro invoice and converted it into sterling. But as a predefined thing, Aerotrac doesn't keep a historical record of the exchange rates. From a freight uplift point of view, this again is quite a detailed, convoluted subject. But basically, Aerotrac allows you to uplift the value of your stock based on landed cost. So if you're buying stuff from overseas and you want to cover the freight cost in the batch cost of the part, you can use this default uplift capability here. So if I buy something at the moment and book it in for £100, or I purchase it for £100, Aerotrac will apply a default freight uplift of 5% to that particular part. And instead of being booked in at £100, it's going to be booked in at 105. Okay. You can see that actually I can have a freight uplift class, so I can actually change that and do all sorts of clever things. Again, a subject that if you want to look at it in more detail, we can happily do that for you after this session. Payment terms, so all your standard payment terms are in here. Probably the most recent addition is the stuff that we've done in relation to the pro forma invoicing. So if you're invoicing, it used to be with Aerotrac that when you raise an invoice, you could only post it directly to the P&L. Now that's no longer the case. You can raise pro forma invoices, which exclude VAT. That's the only thing I will say about it. It doesn't include VAT in the calculations. Basically, it's just a way of being able to say, give me some money. But it puts that directly against the balance sheet rather than the P&L. Obviously, you set up all your tax codes. They basically need to mirror whatever it is that you've got within your accounting software. And then we have these standard miscellaneous charges. And the idea of these is you can set them up either for purchases or as sales codes. And they could be pulled into purchase orders, or they could be pulled into sales orders or project invoices or estimates. where essentially you're just maybe making consumable charges to a customer for whatever reason. So in this case, I came up with the idea that we should do a miscellaneous charge for cake. I have no idea why. I don't know what I was on then. So yeah, that's all the kind of the other financial setups that sit there in between that. Then obviously we've got the period details. So it's a standard format really, very similar to what you get in accounting software really. So I've set up all the financial periods for 2024. I'm running from January to December. If I want to create 2025, I can just click on this copy to new year, put 2025 in, and it'll just calculate that for you. It'll work out the fact that obviously 2024 is a leap year as well, so it caters for all that kind of stuff as well. So yeah, just checking there's nothing else I need to mention that. Probably the only thing I would say actually is Aerotrac is very much period driven. And obviously some of the account systems aren't. They're really more date driven. So we tend to advocate having calendar months set up as the period details, whether you've got them mirrored in your accounting software or not, because it tends to be fairly beneficial from the stock perspective, where you're looking at stock usage, and instead of working that out on a quarterly or an annual basis, or just a quarterly or an annual basis, it works it out on a month by month basis. So there are certain advantages on the material side to having a detailed set of periods in Aerotrac, even if you haven't necessarily got them set up like that in your accounting software. But one thing in particular, just in relation to the way that Aerotrac is very much period driven, whereas some of the accounting software isn't. One of the things that we used to find was a bit of a problem occasionally was trying to reconcile your nominal ledger stock. So, for example, a part is shipped by the supplier at the end of a month. It arrives in Aerotrac on the first of the month and is booked in. From an Aerotrac perspective, it's now in the new period. And so what it will do is it will debit stock in period 2 as opposed to period 1. The accounting software, on the other hand, will see that as being a period 1 invoice, because essentially the date of the invoice is what drives it. So that's where occasionally you do get a difference basically between the nominal ledger stock in the accounting software and what Aerotrac is reporting. So just to let you know, and in case you didn't know, within the finance section, there is a report, FIN 69, which shows you all the purchase invoices in periods which are prior to when the part was received within Aerotrac. So if you do find that you've got a fairly serious imbalance between what your accounting software is saying and what Aerotrac is reporting, that's probably the go-to report, because that might well give you an answer. It does actually tell you, as you're processing the purchase invoice, that is the case, that the parts were received in a period later than the period in which you're putting the part in. But either way, that's a useful report for you to run if you're finding that there's a difference between Aerotrac and your accounting software from a nominal ledger point of view with regard to stock. Okay, a quick run over of purchase invoices. I'm sure you're all pretty familiar with the purchase invoice side of things. Purchase invoices really in Aerotrac are king. Regardless of whatever anybody else might have done from a purchase order point of view, what really matters is what you end up processing in purchase invoices. So I'm not going to go into massive detail here. Just a couple of hints and tips which people may or may not know about in relation to purchase invoices. So you'll see in this particular instance, I have an option here of being able to put freight and handling charges, which occasionally you will get from the supplier, and it's on the same invoice basically as the parts that you've purchased. So in this case, I bought a couple of items for stock. One thing, when you've got a PO for stock, Aerotrac will only let you post to one code: stock, stock, or stock. It won't let you post to anything else. And one thing with Aerotrac, and particularly in the way that we treat it financially, is with stock, it's the one code that you can't adjust or change. It is based purely on the purchase invoice values. You can't, for example, do nominal journals in Aerotrac against stock. And the reason that we did that was it just makes stock reconciliation that much more of a nightmare. if you actually start making changes to the value of things and whatever, or the value of nominal stock. If you're welcome to do that in your accounting software, but purely for data consistency, if you like, we've really nailed it down so that, yeah, as I say, with stock invoices, it's stock and nothing else. And you can't change it. But that's why the purchase invoices become so important. They make sure that as part of the purchase order routine, that you can't pay for anything that you've already paid for, because it will either recognize the fact that something's already been invoiced, or it will recognize that that's a duplicate of the invoice, so it won't allow you to put the same invoice number in twice, which certainly you can't say for some of the accounting software that we've come across. Um, it won't let you pay for anything that you've rejected, and obviously it's not going to let you pay for anything that you haven't received. So the process is extremely robust in terms of what it will and won't let you do. But whatever appears on the purchase order is kind of irrelevant. The person who's processing the purchase invoice is king, basically, and they can change the value of whatever they want to change it to on here, and that will then become the batch cost of the part. Just in terms of a couple of hints and tips, I was just saying about freight and handling. So if the freight and handling has been included on the invoice, there is an option to be able to include that and portion it as part of the freight charges. That's the setting actually within the ledger code setup. So you have the choice as to whether or not to include that $100 into the batch cost of the parts on a pro rata basis. So if I wish to apportion this freight charge, yes, and that will simply roll the value of those freight and handling charges. But that only happens if you put it into that particular box. Okay. If you don't want it to go into there, you can either choose no. So there is the option to say, no, I don't want to apportion the freight charges. Or otherwise, you just put the charge onto this miscellaneous tab here and just say, I'm adding a miscellaneous charge, and it's purely for freight. So I can go into here, I can choose whatever ledger code I like. So I can choose and just simply put it to 5001. Okay. Obviously, one of the key things, and something I mentioned a little bit earlier on, was about work in progress and also about the clearing account codes. So one of the things that you can do, obviously, at a purchasing invoicing stage, is you can take pretty much any cost and you can point it either at a manufactured works order, a project, or a sales order. So if I was to choose a project here and say I'm going to put this against HP 10210, HP 10210, oh, sorry, or not, as the case may be. Oh, better if I put a 1 in front of it. There we go. And you can see that not only can you take that cost and point it at the project, you can even take it down to a very specific line. So for argument's sake, I might have gone and said, right, okay, we're changing as a result of a defect. We've had to change something there. So this might be some AOG freight cost just related to that particular thing and that particular option. From a finance perspective, what Aerotrac does is it locks down the code to one of two codes. Well, in this case, the miscellaneous clearing account. The miscellaneous clearing account is basically a code that Aerotrac uses because you can't post invoices directly to work in progress. Essentially, this is what you're doing when you take the cost, whatever it may be, and you tell it that you want to point it at a works order, project, or sales order. It will create it and push it into WIP miscellaneous. And what will happen is when you raise the project invoice, that will pop up for that particular part. So if I save that, obviously it's got some differences in values, so it won't let me post unless I put it in. But if I put that in there, bingo, it all matches. Save that, yes, and away we go. So all I need to do then is just process that, post the invoice, and away we go. So, yep, very quickly in terms of that's obviously going to update all the batch costs, capture everything related to that. But those clearing accounts, what's important here is that what Aerotrac will do is it will post a credit and a debit to those clearing accounts simultaneously. So and then push it to WIP. So there's a credit against the creditor's control account. There's a debit that goes against the clearing account. But at the same time, what Aerotrac then does is it credits that clearing account and debits work in progress miscellaneous. So that's the transaction. Okay. Another quick tip, just in relation to credit notes. So just in case you didn't know, if I go to PC 10220 here, just to let you aware, when you get a credit note for parts, one of the options you have is to either take that and push that through as a basically straight to the P&L as a credit to stock variance, or otherwise, if you tick this little box here, the update batch costs, what that will do is it'll update the batch cost of the part. So whatever it is that you're processing, so this is currently gone in at $25, but if I process this, it will actually turn it to zero, basically. So it actually updates the batch cost wherever the batch is. So whether it's in stock, whether it's in work in progress, so it's gone through as cost of sale, it will update all that information for you. So just a little, I mean, it's a pretty obscure little thing, but you just so that you know that it's there. Okay. Quick overview of the invoicing side of things. So from a commercial perspective, we've got sales invoices, or sorry, sales orders. So you could do the sales invoicing. I'm actually going to focus on the project side of things, really. So if I add an invoice, one thing in particular, especially with finance, and one of the things that we get most common questions actually relates to, well, what's happened here? What's gone on with a particular job? Um, um, and why is certain things showing? Why is this sat in work in progress and it hasn't come through as a cost of sale? And so there's a kind of a good example. Hopefully, I'll just check and make sure I've got the right project number. So I'm creating a project here for an invoice rather for this particular project. So again, Aerotrac breaks up into the four broad categories: parts, labour, subcon, miscellaneous. You've got a charge basically that shows what the costs are, and a charge of what the labour charges are. In this case, I'm just going to hit invoice actuals. As I mentioned earlier, one of the things you can then do is you can change the ledger codes to whatever you like. So if you want that to go to a different ledger code from sales labor, and you want to call it sales project exchange labor, I don't know why you do that, but it will ask you if you want to change that, just that one line, or do you want to change it to all? So complete configurability there as to what you want to do in terms of the revenue codes and the cost of sales codes as well. In particular, I mentioned about the fact that timing is critical, and a really good example of that, I think, is probably on this parts issue tab here. Sorry, I think I've already raised the invoice. I'll just cancel that. I've already raised it. There it is, HP 101 210. So in here, what I've got is I've got a list of all the parts that have been issued, and I mentioned about timing being critical. Quite often, what people will do is they'll raise the invoice in Aerotrac before the job is actually fully complete, which is fine, not necessarily an issue with that. Anything that gets done to the job after you raise the invoice will find its way to the invoice. But you'll see in this instance, what I've done is I actually created a picking list against the project after the invoice was raised. The part when I raise the invoice before I post it will appear in here, but it's not selected for transfer to cost of sales. And it's doing that on the basis of, well, you might have done that for a reason. You might only be looking to do an interim invoice, in which case you only invoice in this lot, and there's a whole load of other stuff that have yet to be invoiced, and I'll do that on another invoice later on. So that ability to choose what you want to transfer and what you don't want to transfer is basically all set within here. Okay, but that does lead to a time issue, because unless you actually go in and say that you want to select that for transfer, it will stay and it will remain in work in progress. So even though you've posted the invoice, it will go. The other thing is, and this is the bit that often confuses people, is that when you post it, what Aerotrac won't do is it won't show you that part that you didn't select, because that wasn't selected when you posted the invoice. It only shows you what you did select when you posted the invoice. That will remain in work in progress instead, and I'll show you that in a moment. So timing is very, very important. Like all ERP systems, I mentioned this earlier, Aerotrac expects you to do things in the right order at the right time. Okay. Quick thing on nominal journals. Nominal journals are a really useful feature, particularly if you're not billing. The idea, obviously, with Aerotrac is work in progress is typically moved by raising an invoice. You're billing it to a customer. We're going to move it out of work in progress, off the balance sheet, and through to the P&L. Obviously, in certain instances, like, for example, where you're looking after your own equipment or particularly aircraft, there is no invoice that's going to be raised, which is why we created nominal journals, so that you could then just go off and do whatever you need to do in relation to that. So And we've tried to automate it as much as we possibly can. So if I go in and add a project for a project for HP 102 HP, sorry, 10124. I don't know if this will work actually. Yeah, because I've just done a nominal journal routine that moves it. But what Aerotrac will typically do is it will just automatically select whatever is in work in progress for that. You can just save and post. So it's very, very quick to be able to move whatever it is that's in there and move over. Even quicker way of doing that is if you use what we call contract journals. So if you have contract manager switched on, you can actually link a load of projects all to one contract and just do one contract journal, and it will create a journal for all the jobs linked to that contract and move them all to cost of sale. But the other one as well that you can do is, if I just again pick and to give you an example of what I was talking about earlier on in relation to timing. So if I raise sorry, typing wrong there. If I raise again a project, you'll see here that this is a project that I would just showed you the invoice for. That part that was not selected is the only part that will appear. So once you selected it against an invoice or you selected it against a journal, you can't then reselect it anywhere else. Aerotrac locks that record down and it knows, no, that's on the invoice. Obviously, because I didn't select that packing, it appears here on the nominal journal. So it's good in the sense, if it's very robust, you can't push this through as a cost of sales twice, once through an invoice and once through a nominal journal. It can only be in one place or the other. Okay. Right, so a quick run through on the next bit, which is basically the financial management of stock accrual and whatever. Stock is obviously probably the single most important thing, really, in terms of what you do. The most important report probably in that sense is this stock valuation report here, which obviously you can run as of now, or you can run backwards. I'm sorry that it doesn't have the level of detail, but to try to get the report to do that, it would probably take about a week just to get it to run. So this report is actually based purely on the financial transactions rather than the physical transactions going in and out of stock. But obviously, this is kind of like the key report. And really, when you're doing your financial month end, your accounting software basically should be reporting whatever is basically the bottom line figure of what's on here. And this represents what is in the warehouse. Okay. If you want a more detailed version of that, the best report, my personal favorite report in the materials section, is stock 16. So, which is basically just the stock valuation report. But it's a very good report in terms of the fact that it breaks down all the parts. You can categorize it by that stock movement category I mentioned earlier on, all broken down with the different batch things, all that kind of stuff. One thing, and it's probably something that's worth doing on a periodic basis, is just to check that if you run FIN39, the stock valuation report, along with stock 16, the values, if you run them as of now, should be identical. And if they're not, let us know, because we would probably need to go in and change something. There might be a problem with your data somewhere. So that'd be definitely one worth checking. This report, stock 16, does it marry up with the stock valuation report that you can run from here as of now? And the two should be the same. Okay, that's quite important when it comes to showing reconciliation for the stock value for FIN 39 with the auditors, basically, because the two reports should marry up. Stock, one thing about stock, when you buy a part, it always follows the same process. So when you book a part into stock, what Aerotrac will do is it will book it in and it will batch, it will give it'll debit stock by whatever it is. So if you buy a part for £100, if you book it in, it will debit stock by £100. What it also does at the same time is it makes a stock accrual. So what you've also got here is the ability to be able to produce parts received, not invoiced. Sorry, wrong one. If I go to here and we go to parts received, not invoiced. So this essentially is the other thing. If you don't use the full-blown set of accounts that Aerotrac is using, at the very least, your accountants will want three things. They'll want stock, they'll want work in progress values as at the end of a financial year, and they will also want what the value is of stock accruals. What accruals are you making? Also, any subcon. They're unusual, probably for a lot of people, really, unless you're doing repair orders. It's not that often that you'll have subcon received, not invoiced. Okay. But yeah, so very, very important. At the very least, if you have those, you have your stock valuation report, you've got your parts received not invoiced report, and you have your WIP report, then basically you have all that the accountants need to be able to work out what your cost of sales is for the year. And what accruals they need to be making. So Aerotrac does it automatically. Book it in, debit stock, credit stock accrual. When you get a purchase invoice, what Aerotrac does, regardless of where the part is it will reverse that transaction in its entirety. So what it will do is it will, if it booked it debited stock for 100 and credited stock accrual, it will reverse that transaction in exactly the same way as it was made. So it will debit stock accrual, it will credit stock, and then it will do the transaction again. It will debit stock and it will credit instead the creditor's control account. By whatever the value is of whatever Aerotrac puts it in. So if they've given you a discount, it's £95, Aerotrac will catch that up. What it then does is it follows the part. It uses the traceability of the part within the system and tracks where it went. So if it went through the work in progress, it'll do the same in terms of the values in work in progress. And then it does exactly the same if the part has moved through to cost of sales. So the beauty of the purchase invoicing routine is that you know that the cost of sales is always accurate. You know that the margin reports are good. And actually, that's why there are two margin reports, one at posted invoice and one that's the margin report, because quite often the margins you made at the point at which you posted the invoice are very different from the margins you made at the end, depending on what actually got posted down the line. So yeah, so that's stock. Work in progress. WIP material is pretty straightforward. When you pick a part, it credits stock and it debits WIP material. There's really nothing much more complicated than that. But the WIP, basically, it has to be picked either to a work order or to a sales order or to a project. Okay. Labor, obviously, that's far more detailed, and we don't really have time to go into to massive detail on it now. All I will say about Labour at this particular point in time, and perhaps we'll do a session on it completely separately, is that it negates itself. Okay, probably the people who've been looking at Aerotrac might have been scratching their heads a little bit, in as much as with labour costs, it posts a huge credit to the P&L, which is a bit of a head scratcher really, because you're kind of thinking, why has it done that? Basically, what Aerotrac does is it completely negates itself from a labour perspective, because your true cost, your true labour cost, is your payroll. And obviously, if you plugged all that into Aerotrac, you'd be duplicating the costs within the business. So consequently, what Aerotrac does is it starts with every timesheet you post, it will automatically post a cost to the labour cost, but as a credit, not as a debit. Where did the debit come in? So the debit comes in two places. First and foremost, it will be balanced off by non-productive hours. So any non-productive posting basically goes straight to the P&L as a non-productive booking. So that's one of the entries. The other entry would be work in progress labor. So instead of putting it to the P&L, it puts it to the balance sheet and says, right, okay, we've taken that and we've pushed it, and it's now set as an asset, unbilled revenue, waiting for us to invoice it. When you invoice it, at that point, it will move over then to cost of sales. So that's the point at which it then effectively completes the loop and goes through to the P&L. So obviously, there's certain things that are slightly different. If you're doing stock projects, instead of the work in progress, it will take it and include it as part of the batch cost and do it like that. So it actually moves it back to stock rather than cost of sales until you sell the part, in which case at that point it goes to as cost of sales materials. But it all works itself through. Aerotrac basically does the labour cost stuff largely for job costing. That's its primary purpose. And one thing, just a very quick one, really, just in relation to how it works. Obviously, what we try to do is set up different in the personnel setup. We set up departments, we set up costs by department, we set up all our non-productive codes, all that kind of stuff, and they can all be costed differently if you want to. So there's all kinds of things. There's work profiles where we set up the time that people should be working, when they should be working, and Aerotrac works all that out. So all of that is managed. But the one and most important thing, is something that tends to throw people a little bit, is when you set up the employees in the employee details section in here, Aerotrac on the company details sets up, by default, they have to be associated with the department, so it pulls in a departmental cost rate. But whenever you post a timesheet, it's this cost, the employee cost rate, that is actually the cost that gets posted into work in progress. or to non-productive costs. Okay, so because obviously what the departmental cost rate and what their actual cost rate is may be completely different. Okay, so just a little heads up in relation to that. Okay, WIP subcon, well, again, very similar to WIP material. It basically comes from repair orders. Pretty, rare for people to use repair orders unless they're in the component engine overhaul business, in which case they tend to use it quite a lot. But yeah, basically, if you send something out for a subcontract repair, when it comes back, it will automatically go to work in progress subcon if you've done it on a repair order as opposed to a stock repair order. And then, as I've just shown you, you can take any cost you like, basically, and point it at a particular project, either through, through purchase invoices, basically. And that will all end up in work in progress materials, which then pulls itself into the project invoice, which you can then push through as a cost of sale. So the work in progress, the most important thing I'd say about work in progress is it needs to be accurate. For it to work and for it to be, it needs to be honest, it needs to be real. So, which is one of the reasons why I'll go into our next bit, which is the period end procedure. Sorry, wrong place. It's in here in finance under period end. That's one of the reasons why we include within the period end process all the things really that you need. The period end process is basically housekeeping. Okay, is this accurate? So have I got all my purchase invoices updated? Are my costs as up to date as they can possibly be? Is my revenue as up to date as it can possibly be? Have I got any orders that are closed or that have been invoiced that have got costs in work in progress? Well, if they're closed, if they're invoiced, why would there be any costs in work in progress? So essentially, it's just getting you to go and do some detective work on figuring out, well, what the hell's happened here? And that might be somebody picking apart after the job was done. That might be somebody booking hours to the job after it was done. That might be some late cost that was put against it that you chose to take an invoice and point that at a particular project. It doesn't mean it's wrong. It just means there's a cost there and you can't ignore it. You've got to do something with it. If it's either bill it or move it off as a cost of sale using a nominal journal. So obviously we've got parts received not invoiced in here. When you use the period end, one thing to remember is when you run these reports, what Aerotrac is doing is actually rolling back. So these are actually looking back at what the parts received not invoiced was at that point in time. So if you're looking backwards by 2 or 3 months, remember it's not as of now, that's looking at what it was then, and that may well have been invoiced since then. So you've got parts received, not invoiced, subcon received, not invoiced, WIP summary. And that's why we put the WIP summary in. You need to make sure it's accurate, because if it won't, you're going to catch a cold big time. Because anything that's in work in progress that eventually you're not turning into revenue is going to bite you on the backside. Because eventually you're going to have to push that through. It either goes to stock, which would be a positive if it was a stock project, or if it was a stock repair order. So you've got something out being repaired and the core value is sat as a work in progress value. And when it comes back in and you post us the purchase invoice, it will give that part the value based on the repair cost and the original batch cost. So it's designed to capture all of that for you. The one thing that's not in it was the stock valuation report, which, yeah, personally, I always made that part of my routine as well when it came to period ends. So the last bit of this actually is just the movements to journal. And in here we can see a list of all the nominal transactions. So this is excluding anything that was done in either the sales or the purchase ledger. These are purely nominal transactions. So things like stock variance, that's a stock adjustment. If somebody in the stores has booked something out or booked something in manually using a stock adjustment process, there's no purchase invoice related to that. So where's the value come from? So that's one of the definitely one of the ledger codes to really keep an eye on. The stock variance, if you get large variance, and particularly if it's a debit, then that obviously is potentially a serious impact on your P&L, on your bottom line figures. So there's a whole pile of that. Obviously, at the end of each month, you can do what we call a journal movement. So you can create a period end journal. Just one thing, you don't have to do that on a monthly basis. You can do that as often as you like. We've got a customer in China who pretty much does it every single day. So at the close of play, they create a nominal journal and they transfer that over to their accounting software. So they've got a completely up-to-date picture of what's going on a day-by-day basis. So you can create as many of those as you want. Once you've done that, obviously Aerotrac lines everything up then to move over to accounts through the accounts link. So if I was to choose 2023-12, or I thought there was something, sorry, 11, I think it was. You'll see here that we've got some information here. I've got this set up supposedly for a link to SageLine 50. So there are three ways of being able to link to an accounting software. This is the most basic and fundamental. It's using a CSV transfer file to transfer it. And you've got one for the sales ledger, one for the purchase ledger, one for the nominal ledger. Okay. So there's my sales ledger. Here's my purchase ledger. If I go to the latest and greatest for the purchase ledger, you'll see there's quite a bunch of transactions in there. And also, because I just generated that journal movement, I've got my period end journal in here. So all of this is basically ready for you to be able to create an export file, transfer it into your accounting software. And once you've done that, you simply confirm the fact that it's gone through and you're done. One of the most useful bits of this particular thing for me actually is this transfer summary. So once you've closed a period, this is probably about the nearest thing that Aerotrac's got to a trial balance. Essentially, you can preview a report here which shows you all the debits and credits to those accounts. And basically what this is doing is a culmination of the sales ledger, the purchase ledger, and the nominal ledger all in one. So this is my full traceability on everything I've done. So for example, we were talking about labor costs. They're always a credit, but they'll be offset by the debits that have gone into material, labor, and non-productive labor. If you add those two together, they should balance out with whatever you've got on the labor costs on the other side. Simple as. You can't just take the total value of the transfer, because obviously a whole load of that WIP labor has moved over to cost of sales because you've invoiced it. So yeah, and obviously it all balances to zero, as it should. If it doesn't, then you've got a problem, then you call us. But yeah, so that's a very, very useful report in terms of being able to reconcile quickly against what's gone over into your accounting software. Okay. The other integrations, very quickly. Excuse me. There's a kind of a separate way of in the administrative setup, there's a separate way of being able to link, which is through this live accounts interface. Now, I wouldn't advocate anybody going in here and trying to set this up, but basically there's say three methods. First, CSV. Second is this one, where basically what we do is create a completely separate set of tables which capture or have all the financial information added in additionally. What you can then do is you can get a reseller of your accounting software to go in and collect that information from those tables and pull them into your accounting software. The advantage of that, obviously, is it's automated. So you only need to put it into Aerotrac and it will automatically go to those staging tables. And then there'll be a routine from the reseller to pick that information up and populate it into your accounting software. It can also work two ways. So as you're allocating your payments in the accounting software, you can feed that back automatically into Aerotrac. So it's a two-way process. After that, the other option is to have what we call an API, an application programming interface, which is a fully automated one. The main advantage of that is that it's real time. So as you hit the post invoice, it actually validates the invoice. And if the invoice won't validate in the accounting software, it won't post. With the live accounts interface, it will post, it just won't transfer. But obviously you get an error message that flags up and tells you that, yeah, this hasn't gone over. But the API does it real time. And it will say, no, the account code doesn't exist. The VAT code's wrong, the whatever. So the API, that's very much dependent on whether or not we've got a relationship with whoever it is who creates the accounting software. Okay. I mean, obviously, unfortunately, we run out of time, as I thought we probably would. It was always going to be a bit of a stretch, and sorry, apologies for the fact that I was a little bit late starting. I'm almost just about an hour. There is a bunch of other stuff that I can show you about. We talked a little bit about contract management. I think for some of our larger customers, they use the contract manager. Very, very useful if you've got an ongoing flying hour contract with a customer, or you just got a job where you're raising multiple projects and you want to be able to capture them and link them all to a single project, if you like, a top level thing, which is really what contract management is all about. So you can start with a budget, saying this is how many hours, this is how much revenue we should get, this is how much cost we should absorb as part of that contract, and you can work it all out. So it does some pretty clever stuff. One of the other things as well is rework groups. So we talked about having default cost of sales and sales counts. You can set them up by rework group. You can also set them up by stock group. So there's additional features that Aerotrac has that allows you to default cost of sales and revenue codes against specific ledger codes based on the part that you're actually working on or the aircraft type that you're working on. So yeah, there's probably a lot of other stuff that had I been given a lot more time, I probably would have tried to cover. But I hope that was useful. Apologies if I've gone really rapidly. It's a good job why it's recorded, because there might be a bit in there that excuse me, that you caught and you just want to go back over. And obviously, if off the back of this you've got any questions that you want to talk about in more detail, please feel free to approach us, and I'll be happy to answer any of your questions.